Welcome. I'm a self-taught options trader aiming to earn an average of $10,000 a month. This is a monthly review of my trades to see if I hit my target and address why I was under or over that target. Let's dive in. All right, so this is for the month of September. So September 1st to September 31st. So I've tabulated all of the trades that I made this month, and we'll just go through them individually. Okay, so here we have a Purpose Bitcoin cash secured put. So 10 contracts, $11 strike. At the expiration of that, the underlying stock was at 1031. So the result was that I got put those 10 contracts or 1,000 shares. I earned a premium of 45 cents. I risked $10,500, which is the $11 strike times 1,000 minus the premium that I earned. Commission of $12.45. So I earned a profit of $437. I was in that trade for 22 days, and annualized return was 68.81%. XLE, so that's an oil ETF. I purchased a call of 5 contracts for $90 strike. I was in that trade for 5 days. I ended up selling to close at $365. Commission to buy and sell with the profit of $482. So that's a win. And if we annualize that, quite a good return, 2,658%. I wish I had more like that. Okay, so here I sold a cash secured put, and those shares got put to me. So what I did then is I turned around and I sold a covered call. So 10 contracts, same $11 strike, earning a premium of 50 cents. So when that contract expired, the underlying was above the strike, so it was $12.64. So those shares ended up getting called away. So that 50 cents earned $487.55, 94%. Also, I have another covered call here, 15 contracts, 12.50 strike. So when that expired, and generally I let them expire so that I don't have to pay 2 commissions. A commission to open and a commission to trade. And it also maximizes my premium then. Unless, of course, there's a big move in the underlying. And if I can close the trade for a good profit, then I will. But generally, I find in these covered calls and cash secure puts, I tend to let them expire. So again, 15 contracts, 12.50. This one I closed. So I sold it for 50 cents. I bought it back for 10 cents, and that's why my commission, you can see, is quite high, for a win of $567 or 33%. I was in that trade for 34 days. Here's another covered call, 10 contracts, $12 strike. So on expiration, the underlying was below that, 1031, so that contract expired worthless. I ended up keeping those 1,000 shares of BTCC. I earned a premium of 60 cents. I was in it for 25 days. So that's an overall win of $589 or 75% Okay, another covered call. So 20 contracts, 2,000 shares, 1250 strike. When that expired, the underlying was at 1157, so that expired worthless. 40 cents premium. I was in it for 21 days with a win of $780 or 56%. MicroStrategy, so that would be in my US account, and they hold a lot of Bitcoin, probably the largest Bitcoin holding of a publicly traded company. So I purchased a call, one contract, $200 strike. I purchased it for $11.95. I sold it 22 days later for $30.25 for a profit of $1,818 or 2,524%. So not many trades. Normally I would have 2 to 3 or 4 times as many trades as this. So we'll tally all that up. So I've got it here. Let's make that black. Okay, so in my USD account, so that would be the oil trade here in MicroStrategy, I earned $2,301. And all these BTCs are in my Canadian, $2,862. At today's exchange rate, it's a profit of $5,971. So just under $6,000. So the goal was $10,000. So I'm roughly $4,000 short. So why? Why was I short? Well, as you can see, I have 2 call options that I bought and sold. I wasn't able to sell any premium in my US account. No covered calls and no cash secured puts, because the cash that I had in that account was converted into shares when I was put Riot and CleanSpark. The price of the underlying now is too far below the strike price that I was put those shares, so I was unable to sell any meaningful covered calls. So I ended up just sitting on those, and hopefully next month, if the price comes up, I will be able to sell some covered calls. The other thing, I've played those a lot in the past just because my account isn't very big, but I much prefer MicroStrategy. Before the stock price was quite high, it was over $1,000. I think it was $1,500. So if any of those contracts get put to me, I would need $150,000 to cover. So they split 10 to 1. So now I can afford to play in the MicroStrategy sandbox. So going forward, as I leave the miners, the Bitcoin miners, I'll probably do more of MicroStrategy. And the Bitcoin ETFs in the US market have received initial SEC approval. I think they still have a few more steps to go before they come live, but I would much rather just play the Bitcoin trade rather than get involved with the miners. So there we go. I'd say September was a bit of a fail. The other thing that caught me off guard in my Canadian account again was the price of Bitcoin, and I bought in August or I sold a lot of cash secured puts, and they ended up getting converted. So, like with my American ones, I own BTCC. I have a lot of 13 strike, 1350 strike, and even some 14 strike, and the underlying is sort of around 11 or low 12s. So I like to get it pretty close so I can get some good premiums. So even in the Canadian account, I had some shares that were, or some money that really wasn't being used to generate any premium. So I'm hopeful that October will be better. So we'll find out.